Jim Cramer is here on set now. Jim, I mean, it does get to this fundamental question, if you take a step back, which is there something wrong with all of Europe? Did they not write down those debts enough? Do they have a broader problem with their economy? Or is this just over-extrapolation from one small country?
No.
Which is it?
I mean, we said last night on the show, people from home can't play this. This is a very sophisticated hedge fund game.
Yep.
And you just kind of, I don't want to say turn it off, because obviously you want to watch it. But it's become a spectator sport. You really can't. Most of the retail investors who watch my show, you really can't play.
But they're confidence, as you know, we've been talking all day about these stronger than expected readings in various consumer confidence surveys.
Right. Well, they're really meaningless because it's a hedge fund game, and until you have to bring back the drachma, or Trichet has to come out and say the euro's broken. Until then, hedge funds are just going to try to break Italy, and they'll try to break Spain.
Right.
There is no resolution until these countries are broken.
It may be hedge funds playing, but the problem is everyone else is watching, and they're seeing these big negative numbers, and their confidence gets affected, and then maybe their spending gets affected, and it does actually become something that feeds through. I mean, how do we gauge the risk of that? That's all.
If I felt it was an opportunity, I would say, look, other than rotational names like a Pepsi or a Dr. Pepper, just go start picking here. I felt that there was levels to pick. That was wrong. It was too early. I've been saying, listen, if you look at really quality industrials, maybe dip your toe in the water. It's obviously not working, so you got to pull back. I do believe that that this is not the right time in terms of our previous guest was saying, listen, nobody is in strong enough shape other than the Chinese to take this, and the Chinese will now have to, they don't even know, the government doesn't have to worry about slowing its own country down. The rest of the world will slow it down. So it's just not a great level. It's not an interesting level to pick. It's just not a good level to get involved.
Here's my other question, and it comes back to the point Steve raised, and everyone was starting to weigh in on, which is either is the market not paid attention, or are they disregarding out of a lack of credibility at the European Central Bank the comments that Trichet made,
I think it's the latter.
So you think it? So now that almost is more serious. If you don't have confidence or credibility for the European Central Bank, that is a much bigger problem.
We need a default. I mean, everybody knows that. The banks, everybody's going to, all the money, the trillions of dollars of hot money is going to keep pressing until they get a default. Once we get a default, then the euro will stabilize, and it'll be interesting again. When I say interesting, meaning that when you buy a stock, you won't get the report and discover you're down $2 from where you bought it, which is what's happening right now.
Rick Santelli?
The euro versus the dollar just cracked under 126. I'm sure we're hitting sell stops. We're hitting knockouts in the over-the-counter market. They're all, of course, watching the euro versus the yen as well. Same picture from a slightly different perspective. And, of course, you can see as the euro and the equities, they are ping-ponging back off each other. And Jim Cramer is spot on. If you are a retail investor, don't touch the TV, but also don't touch your telephone and call your broker. And not a good thing to do.
Thank you, Rick.
Jim, look at where we are. See, this is my question.
But an interesting level. It's not a level.
But you're down. We have not seen a day like this, and I don't have the exact date. But clearly, what you're seeing now is since last March when we hit the market lows, or the fall of 2008. You're down 560 points. People are seeing this, and those memories of fear are coming back, and that's what can become self-fulfilling.
I think that's true. Look, I'm sure, I was looking at some, I know this sounds boring, but some master limited partnerships that are selling.
Jim, I'm sorry to interrupt.
7, 8.
Matt Nesto has some breaking news. Matt?
We have so many statistics here as this market unravels. Peter Schack, now sitting next to me, just pointed out that the benchmarks have all lost their gains on a year-to-date basis. This 500-plus point loss that we've seen for the Dow is the biggest the biggest one-day loss that we've seen since December 1st of 2008. These statistics, as the market weakens up even more, will probably become outdated. We'll have to refresh them. Right before my eyes, Aaron, I mentioned earlier that the 50-day average got taken out yesterday in the S&P. We just took out the 100. We have just taken out the 200-day moving average in the S&P 500, which is a very, very substantial and significant breakdown of technical support.
Okay, where are we? We're going to get Watner up with some,
market.
It's a very fast market. That's very clear. I want to know, where do we start hitting curve? I mean, you're now dropping 300 or 400 points here in the past few minutes.
Well, when I came down, it was not an interesting level. Suddenly it's down 300 more from when I sat down here. It's getting a little more interesting.
Where's the last time the market was down 750 points?
That would have been fall of
you know,
2008.
obviously.
Aaron, if I can just say something here, Aaron.
I'm not, yeah. Matt?
We've also just looked on the website of the New York Stock Exchange. Circuit breakers don't kick in after 2:30. Just a FYI, throw that out there.
That is a fair point. Scott, you're there. What is the talk? What happens from here? And what are people saying now? You're down 800.
Yeah, I just went through the December.
Yeah, Aaron, and they're saying, when I asked them what the heck is going on down here, I don't know. There is fear. This is capitulation, really. I mean, it is classic capitulation. There is fear in this market. You can take a look at what has happened with the VIX absolutely exploding today. You have seen a flight to safety within gold, a flight to quality within Treasury, a flight out of equities from almost every single major sector. We have seen it accelerate throughout the day, and that's why right now we're sitting down 875 points, Aaron.